What is happening with the rates in Switzerland in 2026? If you are planning to buy a property in Zurich, Basel, Schwyz or Zug, it's very important to know what is happening with the rates. And we have some news for you, which are very important. I'm a former banker myself. We are mortgage brokers and help expats buying their first property in Switzerland. So let's dive in. The rates in Switzerland are very low. You have 10 years mortgages between 1.5 and 2%, and there is something happening right now. The rates in the USA, in the United States of America, are exploding. They are very high. You have inflation, and now there is Japan. Japan holds a lot of treasury bonds from the United States, and they had the Central Bank of Japan had the interest at 0% for decades, and now something happened. They have risen the interest of Japan. So central bank went up to 0.75%, which is something very new. And people are now afraid. The interest rates in Switzerland are going a little bit up. And now people are afraid that they are dumping the treasury bonds from the United States on the market. And that will mean that the rates will go up in the USA. Also, that means it will go up in Switzerland. And Japan is doing that to protect their own currency, so the Japanese don't lose on chances. And now, what is it going to mean for you if you're planning to buy a property? Let's look at it. The inflation in Switzerland is very low, very, very low. And what is going to happen with the rates is as follows. I have seen that the 10 years fixed mortgages went up from 0.4, 0.3 to 1.8, 2.1%. So it's already in everybody's mouth that the rates are going up. So banks are telling me every day, yeah, the rents will go up, the rates, interest rates. And it means for you that you are losing time. If you're planning to buy a property, you are losing time if you're not doing your mortgage comparison right now. Because if the rates go up, you lose tens of thousands of francs. Because if you have a mortgage of 1.5 million, 2 million francs, of 0.1 difference in the rate over 10 years can mean 15,000 francs. With 15,000, I can get a new watch. I'm into watches. I can pay vacations for 1-2 years. I can go on vacation for 1-2 years. You can do renovations. You can renovate a bathroom with 15,000 francs. So that's what it's about. Now, the Swiss market is like a safe haven. People from abroad, they want to invest their money in Switzerland because it's a neutral situation, a neutral state. It's very safe here. You have good regulations, good governance, and that's a good place to invest your money in, a very good place. So while everyone is selling their dollars in Japan or in the States, everyone wants to move their money to Switzerland. So what does it mean for your mortgage? Historically, the rates in Switzerland are still going to be very low. While COVID 10 years fixed rate mortgages were like 3%. The Southern might go a little bit up. So there will be a little less spread between 10 years fixed rate mortgages and Southern. But for you, which is very important, you have to take care that you have to be careful to have a very good rate, a mortgage which suits you, so not too long in duration, not too short. Are you going to relocate? What kind of risk do you want to take? And it's important to get a comparison, because if you save 0.2% per year over 10 years with a mortgage of 1 million, it's going to be like 20,000 francs. With 20,000 francs, you can do a lot of shopping, you can go on vacation, you can give this money to your children, and they can buy a car when they get 18. So you rather give this money to your children or use it for yourself than give it to the bank. That's my opinion. And for you, it's very important to have someone who makes the comparison for you, because you will need to go to 10 different banks. If you earn 200,000 to 500,000 francs per year, you have no time to go from bank to bank. Make a consultation, block here an hour, there an hour, tell everyone who you are, and you know how Swiss banks are. They want to talk, chit-chat a lot. That's the Swiss mentality. I like it. But for you, you don't have the time to move around and talk to every bank. 10 banks are a lot. And then you have to take the offer and see who's good, who's bad, what do you want, do they want from you, how much equity do you need to bring. Maybe they don't count your bonuses as 100%, maybe you get your bonus in stocks. So it's a lot complication, and everything is in German. So what you need is someone who explains it to you in English, someone who makes the comparison for you. So it's like going to a restaurant. You just look at the menu and you say, hey, I'd like to have this one or this one. I'd like to have this menu, cook my steak, medium, let's go. I would like to have this wine. That's what you need. A menu in English so you understand what you're choosing. That's what you're gonna get from us. You can just lean back. We're gonna have a consultation. If you click down below on the link, put in the form your contact details. One of our team members is going to get in touch with you to see if we are able to help you. So if we are able to help you. And then we will talk about your situation, and if we can help you, we will take care of everything. We will explain to you everything in English. You will understand everything, like a restaurant menu. And then we will make the comparison. You can choose the best mortgage rates. You have a lot of comparisons then. And we will explain everything from the first property to the notary appointment. You have someone who explained it to dozens of expats in Basel, Zug, Zurich, Schweiz. So you're not our first client, you're not our last client. So if you want to buy a property and feel safe, buy it safe without making costly mistakes, just click on the link, fill out the form, and maybe we are able to help you. See you.